All right. Good evening, guys. Ken at Tortoise Capital. This is the nightly strategy podcast for 27th of July, 2021. Let's start with the market health check. So we have had about a 5-day really nice run up to a new 10-day high, 30-day high, and all-time high yesterday. And then today we had the first sell-off out of that long stack with a slight gap down, harsh sell-off, a recovery in the afternoon to close above the dragon. But yesterday, you'll recall that I said with us pushing such all-time highs and at a critical state, I was recommending either a 1-bar low or about a 2-bar low down here by the edge of the dragon. Both of those would have hit today. I am not persuaded that the recovery in the afternoon is a strong one until we can get above 441 and some change to make a new all-time high. So this is still a vulnerable price location, and I'm going to treat this as a critical state with the possibility of a sharp move in either direction. So that's reinforced by the 3-period Hull moving average has now rolled over to the downside. We're still halfway between Z1 and Z2. We're above the dragon. The dragon is sloping up. The RL30 extension is up. The PSAR is in the second day of the flip, so we've got a very wide dragon worth of stop here. But tomorrow I'm going to treat this as a really tight risk-on move, critical state move, by which I mean my directional bias is going to be something like this between the high of the day and just below the close. If we get any kind of weakness, I'm going to be looking at the downside move into the width of the dragon down in here. But an upside move I will reinforce to the upside. So I'm going to have a pretty small range of indecision, and I'll be ready to go in either direction. All right, let's see how the sectors worked today. Okay, we'll start off with the S&P at minus 0.5. The Dow was up, or I'm sorry, was a little better, but down 0.22. To the upside, nothing else. So the Dow was the strongest until we get to the Treasuries over here in income land. Treasuries were up strong, 1.07. They're hovering right at the key 150 price level at 149.64. So they are continuing to improve as a alternate defensive play when we see weakness in the equities. So it feels like they're back into normal conditions now. Meanwhile, over with things that underperform the Dow, we have to go a ways until we get to the Qs and the Russell, both down 1.1 and 1.2 respectively. And then emerging markets getting smoked again, once again coming in with real weakness at minus 2%. So let's take a look at the sectors that outperformed. There were only a few of them here. We have finance, lumber. These are kind of all defensive or commodity plays. You got finance, lumber, materials, consumer staples, Mexico, the second lumber, and wheat and precious metals. And then the VIX in the best shape of all at 3.3. To the downside, we have, we get Japan, blended commodities, agriculture, all around minus 0.55. We have Simon Property Group, minus 0.91. Brazil, 9.2. Energy, tech, and S&P biotech and consumer discretion all down around 1%. The FANGs off 1.4. The Bitcoin Trust off 2.3. Marijuana 2.4. ARC Innovation 2.45. Clean Energy 2.66. Moonshots 2.8. Oil Exploration 3.1. Lithium batteries 4.5. That's just discouraging. Blockchain 4.5, and then Ethereum and the large cap blended crypto at -6 and then -8% respectively. So quite a few underperformers today, and relatively broad based, and a lot of the disruptors suffering because you get Coinbase and Squarespace off 4%. Devon Energy 2.6, PayPal 2%, Tesla, Alcoa, Arc Genomics, and Apple all down around 1.9 to 1.5. So broad-based weakness here in the markets, and that's the concern. That's why I would put us in the yellow zone right now, because of that kind of weakness. All right, let's take a look at the work the boys offered today. Some good discussions in the room. Ken H. is talking with Luke on the finding a balance between adding a second scoop too early and too late. If you add too late, you can turn the whole trade into a loser if it reverses, and that's if you're not quick to get that second position up to no lose plus dinner for two. So in my view, the places where we are normally adding a second position is like right at a critical state as the move was successful enough to become noticeable. And that noticeable move, if it's a counter trend move, can be enough to bring the other side of the trade back in and crush it just as you are starting to feel optimistic. So you cannot afford to be optimistic about that second position. You got to assume that that thing's going to fail, and then if you got to scratch it, scratch it. But you don't want to stick around too long. If it's going to work, it should work quickly. And I would, so I'd almost rather get in a little bit early, right around between 0.5 and 1 execution R. That feels about correct, because that gives you enough time to get out of the whole position at no lose plus dinner for two without letting that positive trade turn negative. So that's what I would suggest. The other thing is you can just say, look, what I'm going to do is really concentrate on managing that first position until I have 2 full execution R in hand before I even think about that second position. So rather than being too soon, you are being deliberate and systematic. And then if that starts to waffle, you can get out and you still really do have a nice trade. That'll help you on those intermediate trades where it starts failing right away anyway, and you won't get a double scoop of a loss. So I'm actually going to recommend that you cool it on trying to add that second position too soon and really get comfortable managing that first position. Because if you do that right, you may find that your expectancy is such that you can start raising the dollar value of the risk per trade, keep the same geometry with just one scoop, and then trade that one with an increasing number of dollars at risk, and then you may find that you are reducing your cognitive complexity, and you are standardizing your treatment. So that's the other way to go about this, is just keep the same geometry and just increase the dollars at risk per trade. All right, so, and then I would reinforce what Ken H. is saying here, that moving to no lose plus dinner for two is really key as a way to lock in your positive psychology on the trade. Okay? All right, let's look at the trades. So here's the DAX. This is, let me see, was this Luke? No, this is Nigel. Yeah, volatility on the open unsettles me, so trade at half the size you're thinking of, because all three of those are places that we just got to routinely get in. I mean, the spring turned to winter and the VWAP is collapsing, and the PSAR is collapsing, and we left probably 3R on the table there. This one is probably premature, a 1-2-3. I don't like a 1-2-3 right in the middle of that, while everything is just getting crushed in that opening half an hour. I would much rather see you be more deliberate and like take the owl over here, or take the SSC where you've already got a more confirmation baked into the cake, because the RL10 will have turned and prices cross the dragon, where that will not happen in the 1-2-3, right? But that's a really nice move and a great exit. Great reversal and capture on the correct side of the dragon. There was another. This is the Kata 2. In the same way that you nailed this one, there's the routine Kata 2, which also feels like a SSC if you just isolated that particular trade. So there's another probably couple R's sitting there. Good effort, great scratch. Yep, Kata 2, Z3 breakout, another Kata 2, another Kata 2 and a Z3 pinch. So you only cleared 4R for that, so you're getting paid to learn. Concentrate on the patterns you want. Just notice the other ones, and then when you're ready, you can start adding those with live fire. Okay? Nice work. Really nice work. All right, so here is Ken H. Forgiving himself. This is a really nice 2 scoops. So you get the hybrid frog, you get the Z3 excursion, trying to get a third position and a quick scratch. Remember, that's a loss on 3 scoops, so that erases quite a bit, and that's the trick with the third position. I would almost say just relax on that for a while, Ken. Yeah, because that's feeling painful. Still, this is pretty good. On a bad day where you don't feel correct, and netting 1.5, forgive yourself for the money that you made. Maybe off your feet a little bit here. Probably should have exited here. That's a good exit to recover your sanity. Nice capture and a couple good efforts. And nice work and a scratch. So 1.2. Total 2.2. So about a 3.5 day today. You like to be able to make money when you're on a C level of skill or C level of error free. There were some errors today. This is, let's see, who's this? Who had the... Jamie, okay. Hybrid Frog short, great sniper, perfect SSC and PSAR flip. 1R capture at the RL270, nice re-entry, 1R. Good fractional loss and a way to hang with that during the grind. So that's 1, 2, 3. Minus 1 is 2, plus 2.5 is 4.5 for the day. And we'll take that one each day and every day. Well done. We'll finish up with the daily reports real quick. So we're back in bullish normal. Let me let that catch up for dashboard 1. Bullish normal. Overbought everywhere except the 2-day, which gave that first warning shot. ADX and percent stretch are still favorable. 1% ATR. And then the risk Z is still giving us some warnings. We're not out of the woods yet, although we've been projecting the possibility of the upside. This hasn't rolled to the upside yet, and so the downside is still there. So we're going to be mindful of that. 5 dojis today. Still a wide range of choices in the auto framers. Real strength in McDonald's and Visa out of the consumer staples, if you will, on Johnson & Johnson. And not much else to see. A great, big, vast empty here in the swing patterns. Look, same thing almost in the tactical ETF with half a dozen dojis. Plenty of auto framers to choose from with really good ratios in there. And the better reward to risk ratios are in the globals. There's emerging markets which collapsed today and silver. And then to the upside, U.S. real estate has been a store of value, and Mexico starting to get its game back on. Here are the auto framers that are better than 2-to-1 with the risk that is indicated in this column here. And this is your framing data with your mechanical entries. You got still have some really good ratios in there in emerging markets. I'm liking treasuries. If we get some more weakness, that's going to turn out to be a really nice trade. If it gets over 150, and we have market weakness, that could be a really nice trade. And I like the energy complex as sort of a standalone trade tactically. Has some real possibilities at better than 2-to-1. The percent squeezes, treasuries and energy sector really stand out for me here. As does the mid caps and Walmart. I like both of those. In the multi-time frame NDX, Visa, McDonald's, Johnson & Johnson. That's the opposite of tech. The tech one that stands out for me is Honeywell with a nice 2-day move. And then in the ETFs, Mexico, and then the defensive plays like staples and real estate and utilities and treasury. So today was the day for defense, starting to get a view of where the defensive sectors are shaping out. So it looks like real estate and staples in that role. And that's everything I want to look at tonight. Let me check one thing real quick on that TX swing trade. See how that's looking. That's that little steel company. Still stable. Today was a negative day there, Ken H. But it held pretty well. I think I would keep it and give it another day. But I think that solid blue line around 46.5-ish, I don't think I would let it get much worse than that. Okay. All right, guys, that's everything I got. We'll get this published and posted, and we shall see you tomorrow.